Again, it's so excited to have you here. Today's conversation, I mean, a Saturday morning, we're talking making, money moves. And of course, we're focusing on the banking sector with the public offers and the rights issues that are in the markets right now. Buy, sell, or hold is the theme of today's conversation. Again, it's a pleasure to have you in wherever you're joining us from. You're more than welcome to introduce yourself in the chat box, right? Just tell us, where you're tuning in from and perhaps even what you do. Yes, of course, it's going to be an interesting conversation, an amazing lineup of panelists that we have. And I'll be co-hosting alongside Samuel Ecomi, who will introduce you properly and give you a full, profile of our panelists for today. But yes, an exciting conversation. Of course, Nairametrics bringing this to you on top of thought leadership. We know that the banking sector has been in the conversation and has been taking the spotlight a lot recently with the likes of the windfall tax and conversation about that whitewashing, on the bank stocks. There's also the recapitalization exercise. They are in the heat of it. I believe about 5 banks are in or have started either public offers or rights issues on the NGX, right? One of them has concluded, but I'm sure our panelists will provide us more information on that. So we're just going to, put the spotlight on that sector right now. And as I said, we have the right, lineup of guests who provide us more insights on that. So let's give a brief introduction of our panelists. Samuel Ecomi, I believe, is here and we'll take care of that. Samuel, over to you.
All right, thank you very much, Joanna, for that introduction. And like you said, we have some very strong list of panelists today who would have a conversation on bank public offers, buy, sell, or hold. And I'll just start from we have Chikambono here. He's the founder of KSBC Knowledge Resource Limited. He's a distinguished professional with first-class honors degrees in accounting from University of Ife, where he graduated with a cumulative GDP of 4.81 from 5. His academic excellence earned him several prizes, including Best Graduating Student across various categories. He began his career at Arthur Andersen, now KPMG in Nigeria, where he qualified as a chartered accountant. He later joined GT Bank at its inception in 1990, where he rose through the ranks to become one of the youngest MD CEOs of the 2 Nigerian banks, assuming his first MD position in his early 30s. Thanks for joining us, Mr. Chika Mbono. We also have Barrister Yinka Edu with us. She's the head of FinTech, Banking and Finance, Capital Markets, Law partner. She's a partner at Udo Udoma and Bello Sage, where she heads the banking and finance, capital markets, and fintech practices. With a distinguished career that's in financial law, she has established herself as a trailblazer in Nigeria's legal and financial sectors. In corporate finance, Yinka excels in complex transactions. She notably advised on Boa Group's consolidation of its food businesses into Boa Foods PLC and its subsequent listing, with added 720 billion naira to the Nigerian exchange market capitalization. Her deep understanding of Nigeria's financial ecosystem and her experience in groundbreaking transactions positions her as a leading authority in financial law and a key advisor for complex financial matters in Nigeria and beyond. Just looking at reading this profile and resume, more or less just tells me how robust today's conversation is really going to be. Thanks for joining us again, Barrister Inka. We have with us also Mr. Abimbola Babalola. He's the head trading and products from the Nigerian Exchange, NGX. Bimbola Babalola is a fellow of the Institute of Chartered Accountants of Nigeria, fellow Chartered Institute of Stockbrokers, fellow Chartered Institute of Bankers of Nigeria, associate Chartered Institute of Taxation of Nigeria. He attended the Yaba College of Technology, where he studied, he had his HND in computer science and then his BSc degree in accounting and Masters of Science from the University of Lagos. Mr. Abimbola joined the NGX in 1997 as an executive assistant in research and IT department. He pioneered the establishment and sales of market data at the exchange under a project called CapNet. He also served as the market control officer, term administrator. He successfully delivered a world-class of real-time market surveillance software as the subject matter expert and project manager for the acquisition and implementation of a world-class surveillance software for the exchange, pursuant to operating a fair, orderly market based in on just and equitable principles. And this just speaks a lot to the resume and the depth of the panelists that we have today for today's conversation. Thank you very much, Mr. Abimbola, for joining us. We also have Mr. Ayodeji Ebo, FCCA, FCS, ACSI. Is the MD CEO of Optimum by AfriInvest. Mr. Ayodeji is currently the MD Chief Business Officer of Optimus by AfriInvest, the digital platform powered by AfriInvest West Africa Limited, and the Chief Group Business Development Officer for AfriInvest. He has over 18 years of experience in business and investment strategy and economic and investment research. For joining AfriInvest, he worked as the head of strategy investment at Chapel Hill Durham, as well as the senior economist head research and strategy at Greenwich Merchant Bank. Ayodeji is a member of the governing council of the Chartered Institute of Stockbrokers and has served on several committees of the CIS and currently serves as the chairman of the research and technical committee and a member of the education committee. Thank you very much, Mr. Ayodeji, for joining us for this webinar session. It's great to have our line of panelists, Mr. Chika, Barrister Inka, Mr. Babalola, and also Mr. Ayodeji. Thank you again. Joanna, I'll give the floor to you. Your mic is muted, Joanna, if you can.
Thank you for that heads up. But I was just saying, I was going to echo what you were saying about how excited I am to get insights from the panelists, considering the pedigree that we have seen. And I'm sure we're all seeing, a good number of us are seeing adverts and PR from some of these banks with ongoing rights issues and, public offers, and you may not, know what to do or what direction to go or what exactly is going on. And even if you do, you just may be looking for more insights and where to put your coin. So, I mean, this is a place to get all that and more. I'm going to hand the mic now to Wade Aime, who'll be making the opening presentation.
Good morning, everyone. Distinguished panelists, I'm truly honored to be presenting to you guys. Ladies and gentlemen, I really I'm lost for words. So let me just go on and head on to my presentation. And I hope I will be able to give a background to what we're looking at today, or what we think we will be looking at today, which is buy, sell, or hold. I hope our panelists will be able to give us some insights into whether that market banking offers should buy, that people should invest now, people should sell, or people should hold. We know that banking consolidation, where robust banking started, was in 2005, and a number of you were players in during that time. My former boss, Chika Mbonu, having experienced that too, with him, it was such a learning process for me. And having worked with so many of the brokers and advisors from legal companies, it was such an interesting period just to learn and boost banks, and we see the impact of them today. So let me just go on straight. I'll do an introduction of the 2005 banking overhaul, which I think is the best place to start. We know what the overview is, the transformational journey of the Nigerian banking sector, which started in 2005 and brought an area of where you collapsed 89 banks into 25 towards ensuring that there was more stability, more solidity in the system. The consolidation of 2004, 2005, we saw, like I said, 91 banks to 25 banks, raising capital-based requirements. Exchange rates then necessitated that 25 billion, which was, I think, about $200 million then, or thereabout. Please correct me if I'm wrong. It could be slightly more than that. And so that was the starting point. And how did it come about? Because there was so much fragmentation in the banks, 91 banks chasing different transactions, trying to boost the economy. the economy was coming back into light after we had just been able to pay off our debts of over many years of about $36 billion. There was a need for robust banking and investment in infrastructure, which we have seen today, because we were transiting into a new era of digital, into the digital world. And then it opened up for my brother and my friend at the stock exchange. These were interesting times because it opened up new markets for people to be able to invest, which was raising capital through whether it was private placements or through the capital markets or through personal interactions and so on. And what was the impact? That it created awareness, as you know, in the capital market, increased capitalization. It moved the banking sector from 1.7 trillion to 2.4 trillion in 2005. Public offers and rights issues rose significantly, opening up the capital markets in Nigeria. Investor participation, especially from the retail end, and strategic foreign institutional investors entered the market to broaden the investor base and also broaden the activities of the market. We saw growth in market liquidity. We saw improved investor confidence because banks were now able to take on transactions without having to rely on their foreign counterparts to help them boost their lines. And it opened up new lines of credit, huge lines of credit that you could do transactions. I'm sure Yinka will be able to testify to that in terms of the kinds of legal structure that you needed to put in place for some of the transactions that the banks had to go into. Long-term effects of that on the capital markets, we see capital influx, like I spoke about earlier, introduction of electronic trading, which was not there anymore. We see today stockbrokers, Ayodeji can attest to that. I can't remember the last time you went to the stock exchange floor because you can be at home and you can trade and close out deals. Creation of blue chip segments, which brought about the fact that you have the NGX 30 today, where you have those big industries and big banks who are continually driving the capital market. And like I said, increased foreign investment. Stability brought about increased foreign direct investment, even portfolio investments. We saw a lot of that between 2005 and 2008 before the world financial crisis. And then, like I said, it boosted the NGX, and we've seen the effect on the NGX between 2005 and 2003 because the banking stocks have been some of the most traded stocks over the last 18 years. Consolidation impact was capitalization of the banking sector, like I said, 2.4 trillion at the end of 2025 from 1.7 trillion at the beginning. Global financial crisis, despite the decline across the world, the banks were able to stabilize the economy towards pushing it further in 2008 because they had the muscle to do that. They had the balance sheets to be able to invest in the kinds of investments that Nigeria required. And we also saw the fact that during that period, Nigeria became the largest GDP in Africa. And a lot of it came as a result of banks being able to support the other sectors of the economy. We know that the 2014-2015 oil price crash brought about fall in market capitalization. But since then, we've seen the improvements as it's moved on and it's grown. And those are all reflective in what the banking index and what the banks have done over the last 18 years since 2005. And some of those things that 2005, we saw 45% surge in post-consolidation, despite the decline in through the financial crisis of about 40%. We still saw the banks standing well because they had robust capital base. Asset base was growing every year on year. 35% recovery post-COVID-19 dip, 12% year-to-date growth in 2003. NGS index growth contributing to that, 45% best performing index in the world in 2003. Banking index growth, 114.9% in 2003. The impact of capitalization grew from 293 billion in 2004 to 1.3 trillion in 2006. Capital adequacy ratios improved. We saw more loans being able to be given to sectors that required them, financing both the retail and the conglomerate sectors and wholesale sectors of the economy. A number of issues that were there before are no longer there. The evolution of the banking sector brought about 25 stronger banks. Some were stronger, some were bigger than others, and we've seen the impact of those in the system. Continued importance of public offer going back into the markets and the reasons why investors should continue to put monies into them. It changed the market dynamics for investors, because now investors were more critical about what were the risk issues, what were the governance issues, what were the returns, and you paid more attention to it. And I'm sure, and I think the banking sector was very, very responsible for that over the last 18 years. This is key data from 2024 to year to date. Banking index growth of 10% year to date as at half year, earnings growth of 12% year to date, return on equity about 18%, capital adequacy has moved to about 20%. Total loan portfolios, 22 trillion. We're talking 22 trillion because some banks can have that asset base to back them. So if you look at the top 5 banks, over 100 trillion in asset base, then you can now talk about 22 trillion in loan portfolios growing the economy. I know that there are challenges with the economy now, and these are the times where I think the banks actually do require this new injection of funds towards looking at not just the Nigerian market, but other markets in Africa when you consider the African Free Trade Zone. Notable offers on deck now. Access has already raised 180 billion. Zenith has raised 95 billion. GT wants to raise 405 billion. Fidelity plans to raise 127.1 billion, but they were oversubscribed. And why do we need this new injection of capital and recapitalization in the system? The CBN came out, it's essential for stabilizing and enhancing financial system resilience, critical during periods of economic uncertainty, and a lot of policy shift, which we're feeling the impact now. And I'm sure at the end of the road, that light at the tunnel will be bright and it will be energy consuming and not one that is wasted. What were the earnings in pre-2005? They were low. When you look at the price earning ratio, because of fragmentation of the banking sector, consolidation improved that. Despite the 2008 financial crisis, we've seen price earning ratios grow. Yields have grown. Despite market crashes in 2008, recession in 2015, we've seen the banks continually stabilize the economy. We saw the impact in COVID, how much money had to go through the systems, how much money they contributed to the system. And without that, I don't think we would have been able to go through that 2020 period. We saw the advent of digital banking that improved in terms of the volumes of transactions that were going on and all this, and then the inflow of new financial players in that area, which has also boosted the banking sector, because you need them to be able to hold on to a large part of the system so that it doesn't collapse. How bad can it get? Well, we've seen 2008 financial crisis. We've seen the recession in 2015. We've gone through COVID and we've come out of it and we're improving on a daily basis. So really, how bad can it get? What are the things that I think, in my own opinion, are some of the reasons and some of the things that we can exploit in terms of bank recapitalizing, some moving to 500 billion, some 200 billion. We are in a phase where we're preparing to go into the African market. Nigeria is a leading force. We've seen the expansion of banks and the incursion of banks into African markets. And we know what that has brought for just not the investors, but also for those markets as a whole. After 2021, after has created new opportunities for Nigerian banks, and Nigerian banks being some of the biggest in Africa need to play in that space. We know what some of the banks are already doing with the AFTA committee in terms of digital connection. 5 major banks established 30 plus subsidiaries in 15 African countries. African subsidiaries revenue grew from 10% in 2019 to 18% in 2023. And these opportunities are just huge, but you need that capital base to be able to drive that. Through this expansion, we think and we believe that this bank through investment in technology, 250 billion in digital infrastructure, along with collaborations from what you call the fintechs today, heavy investment in digital infrastructure support, working with the fintechs, working with the telecoms business. And what is the banking sector's role in NGX Compass, especially as it relates to consolidation today, in terms of whether we should buy, sell, or hold? Mid-2024, banking capitalization has achieved 10.5 trillion. We said after the after the consolidation, moved from 1.7 trillion to 2.4 trillion. Is multiplied 5 times after that. Total market capitalization of the NGX has reached 55 trillion, meaning about a fifth of that is coming from the banking sector. NGX surged 10% year on year, fueled by strong earnings and investor enthusiasm. Trading dominance. Most of the stocks that are being traded on the NGX today, 40% of them come from the banking sector. And what are the future outlooks? To embrace digital transformation, which they're already doing, and I'm glad Abimbola is here, Ayodeji is here, Pika, who speaks to that every day, and Yinka, who has to structure out these transactions on a daily basis to give us that advice. So a lot of investors are skeptical because in 2005, some of the shares were purchased at 20 times that value at that time. However, let's also look at the fact that banks have consistently paid out dividends. The earning yields and price earning ratios are continually improved. Share prices are averaging between 2 times and 4 times of the NGX index, and in bank stocks prices at all-time low, in my own opinion, today because of where the economy is. So I hope our panelists can shed more light into that question, whether to buy, sell, or hold. Buy, make that investment and reap the gains from potential opportunities upon economic recovery, which we are on the road on. Sell, not make that investment and lose out on the opportunities to enter the market when bank stocks prices are trading at lower prices. Hold, just sit on the fence and regret at the end of the day the opportunities lost from not making that investment. You know those who missed out in 2005 and what they lost. Thank you very much, and I do hope for a delightful and insightful session.
All right, thank you very much, Wade Ime. And of course, nobody wants to be left behind or miss out on this opportunity, but a very data-packed presentation there, from you, and of course, tracing this bank consolidation journey from, way back 2005. And we look forward to getting more insights from our panelists today. And again, an exciting conversation. We know that the race is on to meet up with CBN's new, minimum capital requirements, March 31st, 2026. And we'll be tracking that journey. We know that the CBN has also come out to say that, it's all in a bid, that the banks are going to play a key role in meeting up with that $1 trillion economy by 2030. So we'll see how this journey goes. But let's dive right into the conversation and get perspectives from our panelists today. We're going to head into the first session, from consolidation to capitalization, the evolution of Nigerian banks and their public offer. And we're going to begin, straight off with Mr. Chika Mbonu. And, from your experience of the 2005 banking consolidation and how it shaped the bank's, approach to capital raising today, how would you say, that has happened, particularly through public offers? And, in what ways would you say that the banks have evolved, their strategies since the consolidation in 2005 to perhaps effectively navigate today's financial landscape?
Mm-hmm.
Well, right.
But Nairametrics, every month, every time you bring us here, or they would have just spent hours, saying all that we should say, and then you still want us to talk. What they have said everything. Why do you need us?
You've been in the industry a long time, and it'd be nice to get some experience.
Your question is very convoluted. But I will try and see what I can do some justice to it. And it's a journey. I was in the room in 2004 at that meeting at I think one of the initial things that Governor Soludo did then, when he took over as governor of CBN, was that meeting where all the CEOs were like, with all of us in our best suits, best cars, came to CBN for the meeting, thinking that we're going to meet. We just chat, and then we entered the hall, and then he threw that bomb that this was going to happen. And obviously, we knew immediately the consequences of the issue, what it was going to do. And a lot of us there were 89 of us then, a lot of us who are answering MDs, EDs, and whatever will, lose that title sooner than later. And so it was very humbling. And the drive back from the CBN wasn't as exciting as it was when we were going. But be that as it may, this is where we are. You will recall in the 2005 consolidation, the stock market was also one of the major sources of funding for the banks. I think our expert, Mr. Babala, may correct me, but from what I checked, I think I was told that about 100 billion was raised by banks then from the market. Now, if you look at 100 billion now, and then check the amount GTB wants to raise alone, check the amount Access Bank wants to raise, does anyone, you just know that, the journey is long. We have come really very, very, very far to that. The discussion, this is the nightmare. This is what is, I spoke to one of my friends who's a CEO last week. I wanted to see him for something social, and he just told me that he's under a lot of pressure. A lot of CEOs he call now, where are you? They're abroad. Everybody looking for how to fund this. Now, let me tell you, as CBN has provided that one of the options has to do with the public offer. But you know what's happened in the market? For a long time now, a lot of the companies have stayed away from public offers because of the fear of under subscription. A lot of things you have seen so far has been mostly a lot of rights issues. People have stayed away from that. So for a lot of banks, CEOs, their nightmare or their fear is, let me give you an analogy. The analogy out there is like a fisherman. Some of the CEOs are like that, even those who have done their public offer already that's out there in the market. It's like a fisherman who has thrown the net into the water, and you really don't know what will come back when you pull it back to the boat. A lot of people don't know what's going to happen because of the circumstances we have in Nigeria now, because of the weak macroeconomic environment, because of the spending power of individuals have substantially been wiped out, because of the fact that there's a commonality in the shareholding, so you find those who are in Fidelity are those who have shares in GT, are those who have shares in Access Bank, are those who have shares in FCMB, and so on and so forth. And all of them have this bunched up arrival into the stock market. And so you ask yourself, really, what is going to play out in the environment? And the other thing that you throw in the basket is this, that I was in a seminar about 2 days ago, in a lot of people who are elitist, and then who have, and I just said, how many of you have taken up your rights here? And it was a mixture. A lot of people said, see, I have my money in other money market instruments or fixed income instruments, and I'm doing 21% or above. I just want to ride you through. I'm not sure that I should just liquidate those distance and go and start buying shares. So some people are saying, oh, we believe that because of the dilution effect of what will happen after the shares have been listed, we believe that the prices will fall from the 40 nairas, from the 36 nairas, from the 9 nairas or 7 nairas that are out there now to something substantial lower, so that we can then buy in the secondary market. So it's a basket of all, but that's what we face. As I said, it is like a fisherman has thrown his net into the water, and you don't know what will come back. Before you could actually say it will be oversubscribed. there's a time you could just say it was oversubscribed. But I don't think anybody can make most of that projections now, especially because of if you look at the analysis of the shareholding of a lot of banks, you find that the retail investors are substantial. And these are people who have been decimated by the issues in the economy. You know, I don't know whether I have put some perspective on the question that you asked me.
Indeed, you have. And I mean, you've also raised the concerns of whether or not liquidity can spread across this exercise, fears of dilution of the shares, and obviously the scramble in the markets. We know that one of them have actually recorded oversubscription. But, you know, just to highlight, I mean, staying with the point of public offers, just to highlight the role that public offers have played in the past, right? Especially, you know, in the role of, you know, growth and stability for the banks and achieving, you know, that they have achieved post-consolidation.
Yes, of course, it has been substantial in the past. You see, you cannot isolate these really without looking at what happened in the last, what I call the downsides or the failings of the last consolidation exercise. But I mean, it has had so much impact. The stock market plays so much, you know, made so much impact in making sure that we achieve the last consolidation. And I believe that they will play that role again this time around. But what I just said was saying is that, you know that this is going to come first mover advantage. It was good that some banks, like some banks I work with or I counsel, I said a lot of times the banks that get out there first, maybe those who catch the fish in the river, because they limit the money in the hands of shareholders is also limited. You know, so will I spend it in Fidelity? Will I spend in GT? Will I spend it in Access? Will I spend it in FCMB? Will I spend it in Zenith? And their money now is not is limited. So no matter how interesting, no matter how desirous you want to invest, the issue that the macroeconomic environment now limits the ability of a lot of people to buy the shares. Thank you.
Mm-hmm. Thank you very much, Mr. Chika Mbonu, for your perspective. And I mean, you were part of the whole experience in 2005, so it was interesting getting your perspective on that. I'm coming now to Barrister Yinka Edu, and still sticking with public offers rights. We know that there has been regulatory framework established, right, post-consolidation, and they have somewhat influenced the structure and success of today's, bank public offers. So in what way has this happened? And how would you say that these regulations have evolved to support the current market conditions? Barrister.
Okay, good morning, everyone. Thanks for having me. I think that in any other setting other than this one, I will say that I was, I will pretend, if you like, that I was still in secondary school at the time of the 2005 consolidation. But to be honest, I was heavily involved in that. I was advised on the UBA Standard Trust Bank, which was the first merger, and was involved with a lot of the mergers and a lot of the sort of public issuances at the time. And what I will say is that, and I know that dates me, and I asked one of my younger colleagues recently, who's a finance lawyer, but obviously was probably in primary school at the time, what was his impression at the time? And he said, that there was a lot of insider lending, where money was being lent to the banks, who were then putting it back into the bank. So it was kind of a bubble, no real money, new money coming in. He talked about the sort of impressions that they had was that, risk management was poor, governance was poor. And so I think that's a good place for me to start in answering your question. So those are some of the specific issues actually that have been targeted and that have been dealt with post 2005. So issues around how a lot of restrictions around sources of funding. There were regulations made around margin lending. So margin lending is essentially where you can, where you lend money for acquisition in shares. It was found that a lot of banks were lending money, or it was alleged that banks were lending money to be invested in the same bank, and therefore no new money was coming in. And so effectively, it wasn't an effective capital raising, and that we saw what happened. There was also the accusation that a lot of mergers were unsuccessful. It led to weaker banks, etc. I'm very happy that I could lead with UBA. UBA was the very first one to enter into a merger, and we've seen that it remains a successful bank now. So mergers in and of themselves were not the problem. So I think that there's been a lot of new regulations, margin lending regulations. There's great increase in risk management regulations that the banks have to comply with, a lot more disclosure. We're talking about almost 20 years here, so a lot of regulations have changed around disclosures in terms of prospectuses, information about the banks. There's a source of funds. The CBN really scrutinizes the source of funds now. Generally speaking, if you're making a significant investment in a bank now, the CBN wants to be sure that you haven't borrowed that money from the banking system. It's actually new money coming in. There's a lot more sort of corporate governance. The FRCN, the Financial Reporting Council, is a new introduction, didn't exist at the time. And they have put in a lot more in terms of the types of reporting that banks need to do, governance, and so on. So I think there's a fair amount that has happened. What I would also like, if you would permit me, and I know that Wade did this a little bit, is to talk a little bit about essentially why this is even important. Why is it important that banks are raising capital? And I think that, and what it told us, and I think maybe my version will be for the non-economists, version about why this is important. And what I'll say is that, you know, we have people, obviously, always have some people who keep their cash under the bed. And obviously, one, it's a risk to them, you know, it can be lost, etc. But also it's not in the economy. It's not driving the economy. It's not building the economy. And so there's a push that people that, you know, obviously that we should have put monies in our financial institutions. And if we do that, then obviously there is a systemic risk to all of us if anything happens to all our money sitting in those financial institutions. And as a result of that, banks are constantly, and the CBN, and this is around the world, are constantly looking at the adequacy of capital for banks. Every time they lend money, they need to have adequate capital to back it up. And what it means is that the more capital you have, the more you can lend as a bank. There are all sorts of different restrictions for banking restrictions, sector restrictions, etc. All of this meant to just make sure that the banks are stable and safe. And capital is a huge, huge part of that. And so the idea that the bank should be raising capital is not just a kind of a nice to have, it's actually essential. The CBN governor talked about the fact that if we're going to have $1 trillion economy, then the banks need to be able to support that with loans, with support, etc. And Wade has also talked about the fact that, you know, with the Africa Free Trade Zone, in fact, we're looking even beyond our economy. And so we need very strong banks to be able to take advantage of that. So the capital issue is a huge issue. This is why we're doing it. This is why you and I are interested. It's not just about, oh, we're putting money into the banks for bank MDs to make more money or whatever it is. It's actually essential. We talk about the bank stability and the fact that our whole economy depends on this. So I think it's very important to understand that. And that's why all of these new regulations have had to be put in place to ensure that when we do invest in these banks, it makes them stronger institutions, in fact, and therefore we're more comfortable and they can invest in more transactions.
Yeah, I mean, thank you so much for that, Barrister. I mean, it's interesting to see how, you know, more legal framework has been put in place, you know, considering the challenges of the first time around and, you know, have somewhat supported public offers and the current banking landscape. Let's come to Mr. Abimbola Babalola. He's the head of Trading and Products Nigeria Exchange, the NGX, right? So, I mean, just to give more of a background, right? Because it seems like we're looking back and seeing how that has influenced the status quo now in the banking sector. So how would you say that the 2005 consolidation impacted the performance as well as the perception of, you know, banking stocks on the NGX? And how does, you know, that whole historical context influence investors' decision right now during the current public offers?
Yes, thank you very much. I think for those of us who are were privileged to witness and participate in that 2005 banking consolidation. Most of us will recall that those were the eras where, you know, you pick your tally number, you have to queue to even withdraw a check, to get money or do any transaction with a bank takes hours. But with the help of this consolidation, banks were able to raise money, you know, do a lot of things. It marked, like the former speaker said, they marked the transformative stage of banking in Nigeria. We started seeing consolidation, we see mergers and acquisition, a lot of academics and a lot of people were involved in that event. But today, what you will see is that for those who participated in that banking exercise, most of them, based on the statistics that is available in the market, we now see banks having over $1 trillion capitalization, some of them sitting in our premium board, which is a board that makes up showing people have good corporate governance and the rest. We see bank developing their infrastructure. And if you speak to the issue of returns, today banks now give dividend and regular dividend to people. You even see some banks having gotten to a position where they now have an established interim dividend that they give to their clients. And you will see that this is phase 2 of that thing, because if you travel, I mean, around West Africa, nearly 80% of banks or 70% of banks operating in some of these countries are subsidiaries of Nigerian banks. You see banks go into other areas, other continents, trying to establish their branch. So if you look at their financials and the data that is coming, this is pointing to the fact that, you know, that exercise was a success. And I think that should guide whoever wants to participate in this recent one to see that. I mean, we've heard of instances of people telling us that one big bank in Nigeria actually started with 20 million naira. And today that bank is in trillions of naira. So we have a lot of things that we can see and that we can relate to. Another thing is, which people must also pay attention to, is corporate governance. We've seen between 2005 and 2024, some of these organizations transiting from one CEO to another, showing that there's resilience, there's confidence, and some of these banks are able to do large ticket transactions. So for me, if you ask me, although as an exchange, I'm not supposed to give an opinion, but look, the facts are there. Just check the facts. And like I said, we're beginning to see some of these banks go into Europe, go into financial centers of the world. Some are even planning to go to New York to have their branches there. These are values. And you know, when you are investing, you're actually investing in the future, not in the present and not in the past. But like you rightly said, the past can be used as a gauge to project where the future is going to be. These guys are mobilizing resources. They want to run and operate a $1 trillion economy. And, you know, so for me, you know, people should just look at their figures. They look at corporate governance. They look at the current performance. I'm talking about NGX 30. NGX banking is also a pointer to the fact that on the average, the banking industry is doing well. And when you cascade that to individual performance, you will see that people had made a lot of money. You understand? And let me say this, you understand? In fact, you will, maybe from our end, it is now that you are seeing a lot of people calling you, I bought shares at one time, you understand? Those unclaimed dividends of over 190 billion, you understand? Some of those dividends were part of the returns that the banks, you know, gave to their investors. So if you're one of those people, there's a process for you to achieve that. Just go through the SEC web portal. You'll be able to recoup those unclaimed dividends, and that might be the money that you are looking to even subscribe in this particular offer.
Yeah, thank you so much for that, Mr. Abimbola Babalola. It's very interesting to see how this ongoing exercise is sort of a wake-up call for many and reigniting interest within the space. It's also interesting to see how young a lot of our panelists were actively involved in the consolidation exercise of 2005. But let me come to Mr. Ayodeji Ebo. How would you say investor confidence as well in Nigerian banks has evolved? We're still sticking with that historical standpoint, right? How would you say that investor confidence has evolved in, Nigerian banks, especially since 2005 consolidation, where we saw, I think Wade cited 89 banks, and now we're shaved down to roughly 21 banks. So how would you say that confidence has evolved? What are some of the factors as well that investors should also consider when deciding whether or not to buy, sell, or hold during this current public offer?
Okay, thank you. Good morning, everyone, and it's great to be here. Yeah, it's tough speaking after my seniors, so I'll just try to look at it from the perspective of the investor. So I think the first thing I would like to notice, there are different types of the investors that will be participating here, and they will have different views. We've all spoken about the 2005 era. Those that participated and bought offers then, they will have different stories. While those that also came after the offer period, that are current investors in the market, they will also have different stories. So looking at those that invested in 2005, you would know as we progressed into 2007, 2008, where we had the global crash. So a lot of investors are still yet to come to terms in terms of the losses. A lot of people had margin loans. So when you approach some of these investors to come and invest, they won't even allow you to complete that story there, because the memories that they took away from there is still haunting them. Secondly, there are those that have been very active in the market. They were lucky to come in when the share prices were very low, and they've made a lot of money in the market. So for them, it's also a good experience to now buy, rather than they've been buying in the secondary market. Now you are buying through the public offer, which is new to a lot of people. So, and if we just oppose those views, I would say that on a balance of factors, yes, confidence has improved slightly, but there's still a lot of knowledge gap that we've seen. When the offer opened, I think Fidelity started. When the offer opened, a lot of investors were confused with what does rights means, what does offer, what does it mean to buy on the floor. These are some of the things that I believe also regulators would also intensify effort in, and also the market operators to educate a lot of the investors. So, but we've seen that it's becoming clearer now. And part of what I would also say when we look at it regarding the confidence, how that has also improved, all the banks almost coming at the same time within this period also led to a bit of confusion initially. Which one should I go for? But that's now going to your second question on what should investors be looking out for if they are going to participate, or which offer do you want to buy. The first thing is you need to know what is the current share price of that company. What's it trading as a proportion or relative to the offer price? Is it trading? Is the offer price at a discount? Is it attractive? So for every investor is rational. So you will look at it. Does it make sense for me to buy the offer, and which I will have to wait for a bit of time, or I buy on the floor? What is the difference? So those were some of the decisions that investors will need to make. If the discount is not significant, it will not be too compelling for investors to buy the offer. So you would see for some investors prefer to buy on the floor if they see that the discount, when you look at the liquidity factor, is it better I buy in the secondary market? So secondly, you also need to look at what is going to be the post valuation. So investors should note that investing in the stock market is long term. So if you have short-term view, you should be very cautious about the offer, because there will be a bit of post offer dilution. So I try to look at some numbers. So you look at, for instance, GTB currently has about 29 billion shares and is trying to raise additional 9 billion. So it means that GTB will be having about 38 billion shares outstanding Access, with their rights, will be having about 53 billion shares outstanding. And you look at Zenith, will be having from about 31 to about 39 billion shares outstanding. You see Fidelity that just concluded from about 32 to about 45 billion shares outstanding, which means that when you look at the last dividend that they paid, when you compare, would they be able to sustain that dividend with the shares outstanding? You know, dividend is paid per share. So if Zenith paid, for instance, 4 naira per share last year, with the new shares outstanding, the dividend that they will pay, if they maintain that dividend, will be about 157 billion naira they will have to pay out. So these are some of the factors that should be considered. You need to see how consistent they are. And if I look at for some of the banks, some of them will still be able to sustain that dividend if they increase it, because the proportion of dividend they still pay out is less than 25% of their PAT, even if we normalize it. So I think that while we would see short-term depreciation in some of those share prices, for long-term investors, it's good to position, because the capital would also help them to grow better, will help them to restructure the bank better. And I think that there are long-term opportunities for the bank. So I would say that for long-term investors, it's definitely a buy for some of the top banks. And if you're a short-term investor, I think that you may want to hold on to see whether share prices will decline before you want to come into the market. Thank you.
Yeah, just to follow up, right, especially when you spoke about the dilution, the fear of, dilution of, the shares. How is that fear influencing, activities of banking stocks, performance of the banking stocks right now on the NGX? How would you say, from your standpoint, how would you say that fear is driving sentiments on the floor?
Okay, thanks. So I tried to look at the data as of July. That's the portfolio investment data by the NGX. So you would see that even year to date, total value of transaction that has been done by domestic investor is about 2.4 billion. And when you look at the amount that the banks that have come out so far are trying to raise, about 1.2 trillion naira. So that's almost 50%. But what we are seeing is that because of the narrow gap or spread between the offer prices and the market price, a lot of investors are also trying to buy directly on the floor. So there's been a lot of activities in banking stock in recent times. So you will see for one of the banks, even the right price is higher than the market price. So investors may prefer to go and buy on the floor. So when you look at the average volume of transaction on banking stocks since the announcement of the offer, that has increased because of the liquidity. And one thing I would like to state is that what would make or mar subsequent offers is the time to allotments, because some of the things that investors experienced during the last the 2005 offer, it took months for allotments. But we believe that with the online platform, if it can be shortened to improve confidence, because those are some of the considerations investors were looking at. How long will I have to wait? Is there a definite time? Is it 2 weeks? Is it 3 weeks? Is it 1 month or 2 months?
Right.
Why don't I go to the floor and buy when I can sell when I need to?
Okay, thank you so much for that insight, Mr. Ebo. And before we move to the next section, I'll be handing the mic, of course, to my colleague Samuel Ekomi. Still staying with you, but now with the role of foreign investments with this ongoing exercise. How would you say foreign investors? Where would you say their sentiments are right now with what's happening with the recapitalization exercise, and how do the current public offers by Nigerian banks perhaps compare in terms of attracting international investors as it has done in times past?
Okay, thanks. You recall when Mr. Chika was speaking that a lot of even the his friends were currently out of the country trying to see how they can rally and investors. So we expect that because of the current situation, especially in Nigeria and the shrinking investor wallets, the foreign investors are going to be like the strategic investors that most of these banks would have to get to ensure that these offers are successful. If you look at if it's just going to be based on retail investors, you would see when you look at the activities of retail investors in the market, even if you had all their turnover to date, is about is less than 2 trillion naira, the domestic investors, compared to almost 1.5 billion of new money, not money that the banks also want to attract. So the foreign investor will play a very major role to ensure that this offer or the recapitalization are very successful. It gives opportunity. I think that there are a lot of, given my bit of experience in also investment banking, there have been a lot of investors that are also strategically looking at how they can come into some of these banks, take board seats in the bank. So these present opportunities. Banks now will be desperate to look at some of those offers. It may not be at the current normal offer, but there would be structures that would be put in place to ensure that these offers are successful. You look at on the secondary market, year to date, activity, 20% of total activity is by foreign investors. So when you look at secondary market, it's nothing to write home about. Foreign investors are not participating given our FX environment. But I think that there will be strategic investments that would come in. The banks have long-term prospects, a positive prospect, and this just an opportunity for some of those strategic investors to come in and bring in funds.
All right, thank you.
Joanna, please. I need to address an issue quickly. I'll take 1 minute, please. I won't take a long time, please. Please. And it's a popular issue now because a lot of people have asked me, and somebody asked a question in a question something. It has to do with, Ayo has answered some of it already. It has to do with last week or so, a popular pastor in Nigeria talked about his experience in buying stocks. And then he actually lampooned the issues out there now and told people not to buy any shares and they should go and spend their money on real estate. And in several fora, I've been asked that question, and on this platform also, somebody has already asked that question. Ayo has asked that question, answered that substantially. Basically, the pastor said he bought at 18, and then the price got down to 360 kobo. That particular share that he bought at 18 is currently trading at about 44 naira. And as Ayo said, if you cumulate the amount of dividend payments this particular institution has paid over the last how many years, it would have more than compensated for any loss that the capital loss that the person would have made. And moreover, the capital loss has gone up to the level now. So as Ayo said, buying shares is not for like, I'll buy it today, the price will move tomorrow and I will sell. Really, it's a long-term investment. Thank you.
And I'm sorry to just add to that conversation as well, if I may. I think what I will say is that a lot of people that lost money in the financial crisis, it was because they were taking advice from non-professionals. I certainly recall, and no offense to Sunday school teachers, I certainly recall Sunday school teachers in my church saying, go and buy this share, go and buy that share. And I think the same works with people who are not professionals telling you not to buy. I honestly think that you need to take financial advice from the appropriate people. I'll just add that.
Thank you very much for that. There's a lot of misinformation going on right now. And I mean, we're happy to have you amongst others on this platform to make these clarifications. And I'm sure this part will be cut out and put out there in the space so a lot of people can learn. Financial literacy is very key. We're moving now to the next section. Samuel Akomi, over to you.
All right, thank you very much, Joanna. It has really been an interesting first section. We'll just dive into the next section, which is talking about regulatory challenges and opportunities in the banking public offers. And I will just start with you, Barrister Inkaidu. And I know you spoke earlier about some of those regulatory frameworks that have come to be since the 2005 consolidation. I just wanted you to speak further on it, on how these frameworks have been able to influence the success of bank offers, public offers going forward. And then considering you also spoke about investor confidence based on some of the people that have lost some form of their investment during that period, what other improvement do you think have been put in place in order to boost investor confidence or protect investors going forward?
Sure. So I think that what I will say is that I've mentioned a few things that people felt went wrong. They felt that some banks did all sorts of sort of shady type of deal. They were a little bit too clever by half. I think this time the CBN has made it very simple. They said, we're not going to count tier 2, we're not going to count any sort of elaborate structures as part of your capital. So they've kept it very simple. And I think that is partly also to provide comfort and clarity around what people are doing. So they're raising they're raising tier 1 normal equity. Also, there was a lot of talk about the rush at the time, that it was such a short time. Everybody was rushing. People didn't have time to carry out perhaps more detailed due diligence, that type of thing. And so I think that whilst they've given an extra, I would say 6 months, because we've given 2 years, I think last time it was 18 months. It's not a huge amount of time, but it has meant, as Mr. Mbonu said, there are lots of different offers in the market at the same time competing with each other, which also makes it difficult. It makes it, as I've mentioned, this whole thing is about stabilizing the economy. And so it's not about some sort of competition. Ideally, we want all our banks to be strong. We don't want it to be one strong bank. So that process of doing it within a condensed time is challenging. We talked also about strange alliances, things that happened, banks that merged that were unsuccessful. I think this time we're seeing that CBN wants to provide a much more hands-on type of approach. We're already seeing what they're doing with the Unity Bank and Providus merger. They're already getting involved. They're looking at it. They're not just saying Unity Bank has X capital and Providus has X, they put it together and that's fine. They're really looking at what the gaps are and looking at how to fill it. I think that's some of the things that's happening here. Again, I will say that this whole issue of and so from our perspective as lawyers, we're also looking at, if you're diligencing a bank or a partner, you really have to do a thorough diligence, because you don't want you don't want to end up with a bad transaction. But what I'll say is that for investors, honestly, investors have to very, very closely look at these investments. Ayodeji has talked about the fact about people looking at whether or not they want to participate in the primary market or in the secondary market, about the delays. The thing about buying in the secondary market, you go to the stock exchange, you buy the shares, within T+3 days, you've got your shares. You've paid your money, you've got your shares. With the rights issue and with the public offer, you're depositing that money for a period. And whether the price goes up or the price goes down, you're committed to that investment. So those are some of the things that you should think about. And certainly, as he said, looking at what the price is in the market currently compared to what's being offered is important. Management is also key. So look at the prospectus, read about it. Do you trust the management in this institution that you're investing in? So those are the things that you need to really, really look at, and some of the legal issues that you look at. I can go on, but maybe I'll give others a chance to speak.
All right, thank you, Barrister. And I really like the fact that you spoke about how investors really need to look at the numbers very well. And I would also I like that as investors should also try and seek expert opinion from financial experts. But I'll still stay with you because earlier Mr. Mbonu mentioned the fact that there's also the fear around undersubscription and whatnot. So as a legal expert, what are the implications for investors now in cases where public offers do not perform as much as expected? And then what might be some form of risk mitigation strategies that they can adopt, speaking about investors?
Sure. So I think that Okay, let me try and remember your questions. What was so reading the can you repeat?
Okay, so I'll come back with that again. So a number of Nigerians and investors generally have said that they made losses from the previous reconsolidation. Now, from an investor's point of view, there's always that fear in the public that it might not perform as much as they want to. I think it was said earlier, Mr. Adeji spoke about dilution of shares and how some of those could play around the share price. What might be some form of mitigating strategy that investors might want to put in place to at least edge against some of these fears?
Okay, sure. All right. So I will ask that question with, and Mr. Bono also dealt with it, with the issue of whether your expectations at the beginning were realistic. As he said, anybody that bought in that at that time, or the shares that he was talking about at that time, if he'd kept them for a number of years, would certainly have seen the shares come back. And so if you had an unrealistic expectation that I will buy the shares today, tomorrow I'll be able to sell them, or in a month's time I'll be able to sell them at twice the price, then that wasn't realistic. And we went through a period when that was the expectation in the market. And that was the time of the crash, that a lot of people lost money because people bought shares at highly inflated prices. The expectation being that within a few days, a few months, the price will have doubled, etc. And that was kind of happening. And you know, they say that always in the market, where by the time you start getting stock advice from non-professionals, you start getting it from, you know, Uber drivers and from Sunday school teachers, etc., then you already know that there is an actual problem, because people are not working on sort of fundamentals. They are just working on sentiment, and people are just buying. So I think that's the thing. I think we all have to understand that with equity, there is a risk that price will go up and share prices will go down. That is something that happens, and you need to think about it on a long-term basis. And for that reason, you need to be thinking about things like diversification. Are shares the only thing, and you know, I don't want to take Ayodeji's job, but are shares the only thing that you should invest in? Should you also look at debt? Should you look at more than one bank? Should you put everything with one? All of that type of thing you need to look at. Do you understand the sector that you're investing in? Do you actually understand banking? Somebody told me the other day that he was looking at a very successful business person, and he was saying that he was trying at the beginning of his career to decide which sectors to go into, and he spoke to some multimillionaire somewhere who owns a lot of conglomerates outside of Nigeria, and the gentleman said, well, you know, if you invest in oil and gas, you know, oil and gas prices go up and down all the time. So that's something you need to understand about that sector. And somebody else said, you know, they were going to invest in, and that with banks, they need to keep raising capital. So every so many years, they come back and raise capital. So there's certain things you need to understand about a sector. I once heard a story about somebody that invested in the English Premier League, and they were coming from outside of, I think they were coming from the US, and they invested in the English Premier League, and they invested in a particular football team. And then at the end of the year, the football team was relegated, and they didn't understand that. In their jurisdiction, there's nothing like relegation. So they just simply didn't understand that. So I think it's very important that if you're investing in a particular sector, you need to understand that sector, understand what the risks are, understand what's going on. Then in the prospectuses, there's a section called risk factors that talks to you about what are the risks, what do they see are the key risks in their industry, to their bank. I think it's important to look at that. The other thing I'll say is forward-looking statements. So you have a lot of statements that are sort of forward-looking. If this happens, we expect this to happen, and you know, we expect this type of profits, etc. But they're not guaranteed. They're forward-looking. So I do think that as sort of educated professional, as educated investors, and this is where we talk about financial literacy, we really need to know what we're looking at and manage our expectations. Also, don't invest more than you can afford. Honestly, I think that's important advice. Don't invest more than you can afford. So you need to look at that. You need to, I think, speak with professionals that can assist you. So that's what I would say. I hope that answers your question.
Very well, Barrister. I had to take that down. Don't invest more than you can afford. And pretty much that's what she's saying there, is that you don't want to invest your money for food or your house rent or something like that, so you don't start chasing around. Thank you very much, Barrister Inka, for that. I will be coming to you, Mr. Abimbola, and this I'm asking from an NGX point of view. We've had conversations around regulatory framework and policies, and I just want to get your take, right? Some of these regulatory policies, especially from an NGX point of view, how are they able to improve the attractiveness of these public offers by banks? And then beyond that, if you can answer this as a follow-up, how is the NGX also ensuring that these public offers are successful? Are there any values or any frameworks, any regulations that the NGS is bringing to the table that is helping banks to be able to achieve success with these capital raise?
Yes, thank you very much. I think, let me say this, that investing in the capital market is investing for long term. So people who really want to invest in long term and have allow investment to grow, these are the people that will actually benefit from investing in the capital market. Talking to regulations, I think after 2008, 2009, a lot of changes happened in the financial landscape, whether within Nigeria or outside Nigeria. So the banking sector itself has a primary regulator that has come up with a lot of regulations in terms of policy, stringent capital adequacy, and the rest. But for us as NGX, I think one thing that is very important to us, and which everybody has also alluded to, that empirical evidence shows that a company that has a good corporate governance policy its shares will outperform the market. And that was why you will see that the exchange, the moment we see all these changes happening and all the corporate governance code being set up, we also set up what we call a corporate governance index that tracks the way and manner most of these companies are complying with their corporate governance. And if you look at in addition to that, we also revamp all our own processes. Number one, you will discover that we publish our rule book. So if you're talking about the rule book of the Nigerian Exchange, it's just one book and it is available on the website. You also look at also revamping and looking at all our processes and coming up with policies. Today, we have what we call, and we actually leverage on technology so that this regulation that we're talking about can be delivered in an effective and efficient manner, such that investing public can have that information. Because we believe that when you provide the right information at the right time, in the right quantity, investors will be empowered and they'll be able to take decisions. Today, most of the CFOs of companies, they no longer send their financials in a physical form. We have what we call ex-usual. They upload those financials on those platforms, and at the press of a button from their office, that same information is available to the market and is available to everybody. That was not the situation before. Today, we encourage, you understand, companies to provide their regular, their report on quarterly basis. And if you're not complying with that, you understand, we're going to sanction such companies. So when you aggregate all this, in addition to that, I recall before 2008 and 2009, the exchange did not have what we call a surveillance team. Now, today, we have a big brother that is monitoring the market, that is ensuring that investors' confidence is there, and that the market is not a yo-yo thing. You understand? Prices are consistent. People can speak to how these prices are gaining, and you can explain them. All this is to build investors' confidence, is to build trust, is for people to see that, these prices that they are seeing is a true reflection of some activities in the company, and that can be backed up by the financial that you are seeing. So that is why today you will see most of the banks you are looking at today, you will see that, the succession planning has been there. We've seen them change from one CEO to another. We've seen stability in those companies, and we've seen what the primary regulator, which is central bank, we've seen what SEC is also doing, and also what the exchange is doing, is just to make sure that, look, anytime you want to provide something, the rules are clear, and we also back that up with investors' education. Now, asking your second question, what can the exchange do? You will see that in most of our operations, we've tried as much as possible to remove inefficiencies. Now, number one, you will see this public offer. The exchange came up with a portal, a website called AGS Invest, such that anywhere you are in the world, you can actually participate using your mobile phone. You understand? And the advantage of this, many people will come to realize, is that even if there's going to be a return, that is, if the offers are oversubscribed, it won't take much time for you to get your money back, because when you were applying to subscribe to that offer, we've already captured your names, we've already captured your BVN. So to return money will be a lot easier. Now, in terms of allocation, when the offer is announced and approved by the regulator, it's just going to be at the click of a button, because we already have your CSA's account, and that your account will be credited at the same time. That is what we perceive as fairness in the market. We're leveraging on technology. And you will also discover that we've also launched what we call USSD, meaning a situation where you don't have to wait and start looking at maybe the electronic and print media before you get information about your investment. By the press of that USSD number, you're going to get price of security. We also take advantage of investors' education. We provide education to investors, try to explain what the market is all about. Like one we did recently is, understanding trading in rights. And we go to, so all this education are aimed at encouraging individuals to participate more in the market and to understand what the financial market can do for them and assist them in actually growing wealth.
All right. Thank you very much, Mr. Abimbola. And I think some of the things you noted are quite notable. The issue around NGX Invest, USSD, especially one that has to do with educating the public as to the things happening in the market and how that can inform their investment decision. I'm particularly interested in the utilization or adoption of technology to improve processes. And that pretty much leads us to our third section, which talks about the role of digital transformation in bank public offers. And I want to come to you, Mr. Chikambon. One of these days, one of my friends saw me, was talking to me about a transaction that she had done. One of her banking applications, she had mistakenly bought shares almost around 500,000 without her knowing. And I think that's quite interesting. So I really wanted to get your take on how digital transformation or technology is evolving the public offer space for banks, and what might be the implications for investors' participation going forward. Mr. Chika.
Thank you again. Mr. Babola has spoken so well about that. The truth is that when Fidelity came out and they were shouting, go and collect forms in your nearest branch and stuff like that, some of us were actually surprised that was being done, especially when I think 3 years ago, MTN did a strictly digital offer, which was seamless, and everything went very well. And so we were wondering how some of us who have not, a lot of people have not entered their banking environment, their banks or branches for almost 3, 4. I have not entered a branch for almost how many years now? That we'll have to go to the bank, collect form now, want to buy shares. So that was a problem. And so we were happy that when the SEC came out with their policy or their policy for the recapitalization, it was clear there that everything was going to be like digital. And even before then, we also, taking it a step back, one of the problems we had in the 2005 recapitalization was the delay in investors getting their share certificates, because it took a long time. And when the prices were released and things were moving south, people couldn't sell because they didn't have certificates, and that affected the market because of the delays in allotment, delays in return of money, and so on and so forth. So I'm happy that end to end now, the NGX, SEC, everybody's, even the central bank, everybody's tied in to make sure that everything moves well. Now, you know that the drive through for Nigeria now is the digital banking, digital space. Everything is on the mobile, and it will help in bringing more people into the net. As I told you before, I was not going to go into any branch to go and collect form, to go and fill to buy any bank shares. But with the ease of it being on a bank app, indeed, for most of the bank apps now, as you open the bank app to do your normal transactions, the first layer you see is their rights issue or the public offer. and immediately touch your mind. Have I done this? Have I bought my rights? Should I buy these shares? So every time you open your bank app now, that happens. And I believe that will have a salutary impact in bringing more people into the net that wouldn't have been able to buy the shares. I must tell you that the complexity of the process has been a limiting factor, a discouraging factor for a lot of investors in the past. And with the way it has been done now, the fact that you can do it digitally, and as Mr. Bimbola has said, in every sense, you have your BVN, you have your name, you get your dividends, you get your share, your things are allotted to you, and so on and so forth. It will help the process. Again, one other interesting thing there, is the digital platform supports what SEC has said, that there have been no preferential allotment. No preferential allotment. So there's a trail, a timestamp on when you bought your shares. So the era where the banks will decide and say, oh, we will not give Shegu his shares or John his shares or whatever, that will be substantially removed with the digital trails. So this is very important. It will attract more people into the net. A lot of younger people who are very comfortable with their apps will actually try this, and then most importantly, the education required to bring more people into the net is not happening yet. I believe we are still speaking a lot of lingo, financial lingo in marketing these stocks. I believe a lot of these companies, banks actually, bring this into the brass tacks, use our native languages and so on and so forth, even the broken language, and communicate better with potential shareholders or investors so that more people will come into the net. Thank you.
Yeah, thank you very much, Mr. Chika, for that. And I think that's quite interesting. The last part again, importantly, education and how much well you can be able to attract the larger part of the population, even if we can go beyond the lingo, the financial lingo. I want to come to you, Mr. Ayodeji. I know you operate a financial technology company, and I really want you to look at this question from two sides. So the use of digital technology. So one, how is it able to enhance transparency and accessibility to these bank public offers in a way that, of course, help decision making for investors? And then the other way is, again, how can banks also leverage on this digital technology or platforms to be able to increase their coverage in terms of attracting investors to these public offers?
Okay, yeah, thanks, and very good question. And Mr. Babalola eloquently covered a bit of this. And I would say that the role of digital platforms cannot be overemphasized. Mr. Chika also spoke about it, where you would see with the current process of application. So we saw how successful the MTN offer went, and how investors were really very excited that within weeks, they were all allotted and their shares were available to them. This is what the digitalization would bring. The major setback of the market has been the delay in adopting digitalization. So with what we have seen now, NGX has been able to provide a platform where investors can subscribe. And on that platform, once you even sign up, you would be able to see the different offers. So it's now left for you to decide on which offer you want to go with, which I would say it's a very positive development in our markets. Secondly, we believe that with the time for allotment, fiscal forms should be eradicated, because one of the things that it happens and that causes the delay in allotment is reconciliation. But once you are able to use digital platform to collect the data, it's easier for you to also reconcile that data. Then I recall those days in 2007, some of the offers that would have to, the lodgers in hotel have to key in those names in Excel before. So you will see that it's prone to errors at that point. But with digital platforms, that would also ease allotment and also reduce the time for allotment. I would also like to also emphasize that the platforms, what NGX has done is laudable. So they should also now take it forward to now begin to see how they want to integrate with digital platforms. So what we call open API, where you are also able to integrate such that everyone, all investors does not have to come through the NGX platform. They can also come through other platforms. At the end of the day, it's still one channel, still the market that they are also going to also trade through. So I think that that's also one thing that we need to do. The banks are being able to use their digital platform well this time around. Like you said, even like during one of the bank's offer, anytime you log in, was almost getting tiring that the first thing you see is this offer. Emails, night, morning, day, there's no way you would not know that something like this is going on. And we've seen other banks adopt that. So it helps. But beyond even the notification, the publicity, I like what Mr. Chika said. There's that financial literacy. I know the NGS, the regulators are trying, but there was something I saw distinct. I was privileged to work on the MTN offer then. One of the distinct things that we saw then was that they had road shows across the country. That really helped, created the awareness. They were able to speak to different forms of or categories of investors beyond those that have access to online. So that awareness was out there. So these are some of the things that I think that with digitalization, coming up with those materials in a way that people will be able to relate, not getting technical with them, they will be able to relate with it. So I feel that once we're able to do that with the digital platform, it's really going to help move the market forward.
All right, thank you so much for that breakdown, Mr. Ebo. There's still that, from what you're saying, there's still that gap when it comes to financial literacy that needs to be filled. A lot of public offers and rights issues out there, a lot of awareness in quotes, but that literacy still, that gap in information still needs to be filled. Thank you for that. And I'd like to entreat all, okay, Mr. Abimbola.
Yes, thank you. I think the last speaker mentioned something about the NGX allowing other APIs, to connect. Actually, that is the standard that we maintain. Most banks, that is why you see that bank can applications and other applications can actually connect to what we're doing. Another good thing I equally want to mention again as to what we're doing is the fact that we have now put the market in the hands of investors. So today, via your stockbroker and with an application that is on your mobile phone, you can actually have access to our market. You can buy and sell yourself. And also on the CSCS, there's what we call direct cash settlement, such that as you are doing your transaction, settlement is happening. So the moment all this allotment is announced and is available, you don't even have to start calling anybody before you can do your transaction. Thank you very much.
Yeah, thank you so much for that. So it's more accessible to people from what you're saying. But I'm going through the chat box. I'm seeing a lot of live experiences, people that were burnt one way or the other. And again, it highlights the importance of that financial literacy, getting financial advice, and being a part of webinars like this. We're moving on to the next segment, and because I know how things go usually and our time, and obviously we want to get a lot from our panelists, I would just like to entreat our panelists. I can see there are a lot of questions in the Q&A box. So if you're not speaking or answering a question, please find time to answer some of the questions in the Q&A box as we head towards the end of this webinar. We're moving to the final session now, strategic considerations for bank public offers, buy, sell, or hold. That's the key question at the end of all this talk, buy, sell, or hold. And we're going to begin with Mr. Chika Mbonu. I'm sure, anybody that speaks on the capital markets or investments or the banking sector, that have had 2 or 3 people come up to them and ask them, oh, which stock should I buy? So, I mean, what would you say are the considerations that should influence, investors' decision, right, when deciding, to initiate a public offer, making that decision to buy, sell, or hold?
I'm indeed, Ayo has dealt with this extensively, but let me just latch 1 or 2 things there. See, a lot of people, you cannot tell them to buy shares now because of the bad experience they had in 2005. And it had to do with, again, education, lack of education. I was in active banking day to day then. I knew a lot of my brothers in Alaba, Idumota, all suspended their trading and used their capitals to buy shares. And every morning, all of them became stockbrokers. Has Zenith moved? Has GTB moved? What is it? People were watching the price movement day to day, thinking that that's how the stock market works. The first thing I want to put out there, my brothers and sisters, investors, everybody listening, is this: investment, as everybody has said in this presentation today, is for a long term. If for a long term, if you don't have the appetite to put out your stock in the long term, at least a 5-year horizon, don't step in. It's only occasionally, that some things happen overnight and then prices move like that. But give yourself a 5-year horizon minimum to enable you get a capital appreciation and the dividends required. Don't use 1 day's 1-year window to measure the stocks. Ayo has spoken so much, as before I said, look at the solid, look at how well the bank is run. Look at the track record of the bank. We know how the banks are doing. The issue for me, again, even as Owade said, it's not outside Nigeria. The growth is inside Nigeria. Sometimes people when I say, people get shocked. Listen, the SMEs in Nigeria don't get loans from legacy banks. They don't get loans from legacy banks. They struggle to get loans. Go to a typical shopping mall or market and go and check. So the SME sector in Nigeria is not being addressed by Nigerian banks because of the absence of a risk management framework. That is, how can they lend money to them and get the money back? So going outside Africa, to go and expand into Africa when Nigeria has been untouched. Real estate lending in Nigeria is still very shallow. So what I'm saying is that there is so much potential for growth for banks in Nigeria, even if the number of shares are going to increase. I recommend that for all our listeners. If you have the money, vote with your money. The banks' businesses are going to grow. We know the number of shares are going to increase, but the issue is that there's so much, untouched territory for them in Nigeria, and then even Africa. You're going to have more returns. So that is that. The corporate governance for Nigerians have increased. The monitoring has increased. The business models have increased. A lot of things that problems we had in 2005 that made people lose money, all those conditions are no longer existing. Banks are better supervised. All those bubble capital that we had in 2005 will not exist this time around. So, the conditions are right for the investors to come into the banking industry. Those are my comments.
All right, thank you very much. So yes, sir, it's pretty much like a vote. Which bank are you betting on? Which bank are you voting for with this ongoing exercise? A lot to consider when casting your vote. Let's come now to the barrister in the House. And of course, there have been concerns expressed. I've been through a couple of comments, about the framework, the legal framework, and how, investors are protected in such exercises. So, I mean, how do you say legal considerations can shape the outcomes of the public offers? What confidence can that legal framework also give investors, right, who are looking to operate in the space and make informed decisions? Barrister Yinka Edu.
Sure. So you certainly have legal rights. I guess that's what I would say. You certainly have legal rights, rights against that you can take against companies for misstatement, that kind of thing. But I assure you that on so many occasions, and from some of the stories that I hear, it's not actually that there was any type of misstatement. It's often that the investor did not actually read the information and take the time to understand the information, and also to understand whether that type of investment was right for them. I just think that where I'm going to go with this, buy, sell, or hold, is that honestly, you need advice from professionals on this. And whilst it has been in the past, very expensive to get that, we have a lot of, and I'll put my fintech hat on, you have sort of small sort of fintechs, etc. now that actually have things like robo-advisors and things like that that will assess for you, even at a cheap price, maybe what your income is, etc., what it is that you can look at investing, so you're not going to the extreme. And where you want to invest something small, there are all sorts of fintechs now that are that will sort of collate investments. You can make a very small investment, collate, in order to give access to maybe larger shares. You don't need to go and borrow in order to be able to meet the minimum investment level, that type of thing. So I would say that it's to take care, it's to take advice, it's to definitely read, it's to understand your own risk appetite. But certainly, if a legal wrong has been done to you, you do have rights, and you should use them.
Thank you so much for that. So, I mean, definitely they are protected by the law. And from what you've said, it's important that, you read through the terms and conditions and also get advice on making these decisions. Thank you so much, Barry. So let's come now to Mr. Abimbola Babalola. And how would you say that market sentiments across, around the public offer have influenced? I think we've had Mr. Ayodeji Ebo talk on this a bit, but how would you say that has influenced the performance of, bank shares on the NGX, and what should investors watch out for?
Yes, thank you very much. I think there's something that for me was very, very interesting because I won't say for the first time, but for something recent, we start seeing a situation where a bank was offering their share price. You understand? That is, they were doing it right, and the right price was over and above the current market price. What people call the traditional or trend is that you want to buy right at a discount. But really, if you really look at it, the sentiment and what we call the signal effect of what that bank is probably telling people that people are not paying attention to is, my shares is undervalued because I believe I'm going to get value for it. But if you look at sentiment generally around the market, a market that, today, it has returned more than 30% year to date, trading, doing something very close to inflation. And, foreign investors, as of December, they were accounting for 4% of what was happening in our market. Today, they are doing something around 20%, stability in the foreign exchange. So it means that the sentiments are there. And what I would just advise people to do is that the market itself is ready and it provides this opportunity. But before you invest, don't forget you are investing for long term. You are buying into a company that offers a product or a service. You must understand what are the sources of revenue of this company. Is the company performing? What has been the performance of that company over a period of time? You understand? What is in terms of corporate governance, how has this company been doing? What has been the association plan? When you aggregate all this and you look at the economic macros, where is inflation? Is inflation declining or is it depreciating? I mean, is it coming down? You're looking at interest rates, and you're also monitoring the performance of all the indicators that we have as a gauge. And NGX 30 is to tell you what the performance of the market is, and you have the banking index in itself, that is telling you the direction of the market. If you aggregate all these things and you ask questions, the last thing I will say is, please, once you come to that conclusion that you want to invest, please talk to your stockbroker. Ask question. Ask question. Once you ask question, you will get the right answer, and that will guide you as to how best to make investment. Thank you.
Right, thank you very much. So yes, be bold enough to ask the right questions around this exercise. Mr. Abimbola Babalola, the head trading and product Nigerian Exchange. Finally, let's come to Mr. Ayodeji Ebo. You have spoken extensively. I mean, I have to give you that on some of the things to look out for. But as we tie things together, your final words and thoughts, right? What are the key signals that investors should look at, should monitor during this exercise, the public offer, to guide their decision to buy, sell, or hold?
Okay, thank you. So I think especially I'll start with new investors. So once you need to first of all understand your risk appetite. Investments in stocks or shares or equities can be volatile, or you invest for the long term. So if you are the type that if you buy at 10 naira and the share price comes down to 8 naira and you can't sleep, you can no longer sleep, shares is not meant for you. You need to first understand that. But when we say it's volatile, it's long term. It can come to 7 naira today and tomorrow it can be 20 naira. And that is why you are investing for the long term. So once you have the understanding, so if you have invested, you also need to now begin to monitor quarterly performances, which we call corporate action. The results of these companies will be published on a quarterly basis. You need to know how they are performing. So I meet investors, I say, I invested in this company last 10 years, 20 years, I don't even know what they are doing. Now, especially for new investors, the NGX is doing very well in publishing. This is free. You go to their website, you can always download and see what they are doing. Just look at the basic earnings. Are they improving on a quarter-on-quarter basis, or that means this quarter and last quarter, or this year and last year? Are they improving? Dividend is also very important. There's what we call dividend yield, or I use dividend return so I don't sound technical. The return that you get based on dividend. So if you have invested in a stock and it's 20 naira and you are going to be getting 2 naira dividend, it means the return based on dividend is 10 naira. So if you're investing in these shares, can you look at what is their last dividend payment? Most banks will not like to reduce their dividend from their last dividend. What they always want to do is to grow the dividend based on. So if the bank paid 4 naira last year, 4 naira divided by this current share price, if I'm applying for it, is it enough? That's from a pessimistic perspective. Even if there's no capital appreciation, the dividend I'll be getting is barely enough. So if I know I can get between 11%, 13% dividend return, even if there's no share appreciation, pending when there will be share appreciation, you would know that it's still fair enough. So when you see banks that the dividend yield maybe is less than 7-8%, you may want to you may need to stay longer. That means you'll be depending more on capital appreciation than dividend return if you are going to invest in those banks. So you need to note that. And also, most banks, with the help of the NGX, most companies have integrated, they have what we call trading platforms that have been integrated with the NGX. You should be able to monitor the performance of your shares. Once those shares are allotted, and one interesting thing that was mandatory this time around is everyone has to create a CSS account. So there's not going to be the issue of share certificates. It will be credited to your stockbroker that you have selected. It means you have access to those shares and you can see how they are doing, whether you even want to buy more when you see that they are performing very well. So those are some of the basic indicators. Then watch out for in terms of their strategic positioning. Are they expanding into other countries? Those countries, will they able to make more business? What products? In this era, we're looking at AI. We'll watch which bank would be the first to also integrate AI or adopt AI into their business. These are some of the things that would help you know whether they will grow into the future or they'll also be able to deliver. Thank you.
Thank you very much, Mr. Ayodeji Ebo. I mean, it's great getting the insights from you. He is the MD, Chief Business Officer, Optimus by Afri Invest. It's been such an amazing session. Our time is fast spent, but I'm sure there was so much that you were able to pick up. And for the record, Nairametrics has a capital market show. Most of the indices and the signals that Mr. Ayodeji Ebo mentioned, it's something that we track on the show when it comes to earning results, share price movements, and all those things. It's on every weekday on News Central, DSTV channel 422 from 4 p.m. So make sure you're a part of that show and you're up to date on the regular goings-ons with the banking stocks, especially in the middle of this recapitalization exercise. Thank you once again for being a part of today's webinar. I'm handing the mic to my Oga Wade Aime to give the closing remarks. Are you there? Okay, looks like I'll have to be doing the closing remarks. But again, it's just a huge thank you to you for being a part of today's webinar, taking time out this Saturday morning. Nairametrics is all about championing thought leadership, financial literacy. So make sure that you're following all our thought leadership programs across all platforms. On X, we have a show there, X Spaces, Tuesdays and Thursdays from 6 p.m. We have radio shows, right? There's one on Monday as well, tracking what's going on in the capital markets. Follow the Money with Audrey on Classic FM. There's Everyday Money Matters on Wednesday. There's so much, but if you want to get a full coverage and know what's coming up next, follow Nairametrics across all social media platforms. Yeah, you'll be notified about the next program that's coming up on the next webinar. Again, a huge thank you to all our
Hello,
speakers.
Joanna. Sorry, I'm so sorry. I'm so sorry.
Okay.
I'm so sorry. I had to switch to my phone, so I'm not going to use my camera. So I'll just spend 2 minutes and I'll do a quick take. I'm so sorry. I was trying to maneuver left, right, and center. But before I take the quick roundup, I need to ask our panelists. And I'm not trying to put you on the spot. I heard what you said about the buy, sell, or hold, but I want you to mention to me, should we buy into this process of bank capitalization now? And I think I would start with Yinka. Buy, sell, or hold. Should we buy into that process, or should we sell it, or we should just hold? Yinka, what's your feedback, please?
You know for sure I'm a lawyer. I'm not gonna fall for that. I'm afraid of
No, I'm not telling you to tell me the banks that you're going to buy for, but based on all the things you are saying, is this something that people should look at? And that's what the buy is.
I certainly think that's what I tried to start with, because I think it's an important
okay,
it's
so
an
that's
important
fine.
development.
Yinka says it's buy. Chika, my boss.
Yes, miss.
Buy, sell, or hold.
Come on, if you've got the money, go and buy.
Thank you very much. Ayodeji, buy, sell, or hold?
I'll say buy for long-term investors.
You say buy. And sorry, I'm using my phone, so my eyes and Abimbola, buy, sell, or hold? Buy, sell, or hold. You've given us all your pointers. Buy, sell, or hold.
What I would advise or say here is that people should consult their financial advisors.
Don't worry about that. I'll give all the nuggets of all the things you said. Buy, sell, or hold.
Please permit me not to say anything.
I'm not telling you to tell anybody to go and buy shares anywhere. Should we buy into that process? That's the question. Buy, sell, or hold the process.
They should seek advice from financial advisors.
So I will take it as Abimbola says it's
Bravo,
a buy.
Abimbola, I agree with you.
Well, Yinka tries to sit on the fence. Thank you, Adeji. Thank you, Chika. And based on all the things you said, and the beautiful thing about this is you've said so many things. Seek professional advice. Speak to your speak to your financial advisor, speak to your brokers, speak to your lawyers. Use data to make decisions. One of the things that this is trying to do is bring that 100 trillion that is inside the economy into the financial services space. Diversification of sectors We need the banks to be able to inject more money, especially into the retail side of business. Thank you very much, everyone, for listening. Remember to follow The Money on Classic 97.3 every Monday with Ugodre, and Everyday Money Matters on Lagos Stocks every Wednesday at 7 a.m. 8 a.m. for Follow the Money. And like Joanna said, Market Pulse on News Central every day of the week, 4 p.m. Thank you very much and enjoy the rest of your weekend. Go, I told you I might be there now. Joanna, back to you. Joanna, back to you, please.